So do you want to be an investor or a trader? I'll actually give you 6 differences between the two. Let's dive in. Number 1, trading is a job. You're actually still trading your time for a paycheck like any other job. You're working for money, whereas with investing, you are flipping that equation and making money work for you with the power of compound interest. Number 2, trading is high risk. So with trading, what you're doing is you're trying to time your entry and exit points. In other words, you're trying to time when you buy or sell. With investing, it's not about timing the market, it's about time in the market. You want to buy and then keep buying more. That's where you really build your wealth. Number 3, trading is time consuming. So I've had a few people on my podcast talking about trading, especially Forex trading, and they can work 8 to 12 hours a day, Monday through Friday. And in many cases, they don't even make a profit. Could you imagine that? Working an 8 to 12 hour a day and then you find out you didn't make any money? If you have a job like that, I recommend you probably polish your resume and look somewhere else. But unfortunately, that's what happens with trading. It's a lot of work, and in many cases, it doesn't pay out. Whereas with investing, you don't have to do a lot of work. For example, I probably look at Tykr maybe 15, 20, 25 minutes a week, sometimes a little more if I want to research new stocks. But fortunately, I can use the platform to do a lot of heavy lifting for me. For example, I can add stocks to my watch list, and if anything changes, such as that summary, that margin of safety, or that score, I will get notified so I can make some decisions thereafter. But it's nice when you can have a tool that really does the heavy lifting for you. But if you don't use Tykr, investing actually doesn't require that much time, especially 8 to 12 hours per day of work. Number 4, trading is not consistent. So a lot of the traders I've spoken with have said they don't make consistent income. They can go day over day making losses. They can go month over month claiming losses as well. And then all of a sudden they'll hit that 4th or 5th month and make a profit, which is enough to, it creates this same excitement you'd probably feel at a casino where it says, ooh, I made some big returns. I can probably do that again. Well, guess what happens? They fall into another trench where they're making losses over and over. So if you're somebody who wants a consistent paycheck, trading probably isn't it. Now, when it comes to investing, fortunately, investing is very consistent. Like with Tykr, we set expectations. We try to make between 15 and 50% per year. That's very realistic if you're buying strong individual stocks. One of my favorite case studies is a guy by the name of Ronald Reed. I talked about him in other videos, but he was a janitor that built up a portfolio of $8 million. The question is, how does somebody who's making close to minimum wage build up a portfolio of that size? The answer is buy strong stocks and keep buying more month over month. Don't skip months. Keep buying more every month. I think through the 70s, 80s, and 90s, he's buying stocks like GE, Johnson & Johnson, even some other large blue chip stocks. He wasn't buying penny stocks or anything fancy. It's just very Warren Buffett style. Buy some strong, usually boring businesses, but again, keep buying more every month. Number 5, 99% of traders actually lose money. I have an article here from LinkedIn that actually talks about this. 99% of traders lose money. There's numerous other articles out there as well. If you get into trading, just set expectations. It is very difficult to make money. Trading is high risk because you're trying to time your entry and exit points. Whereas with investing, kind of like what Ronald Reed did, you're investing and then you're investing more in strong businesses. Don't worry about that sell point. Just keep buying more. That's the tried and true way of building wealth. And number 6, this is a fun one. There are about 3,000 billionaires on the planet. And out of those 3,000 billionaires, guess how many are traders and guess how many are investors? I'll let you think on that for a second. So out of those 3,000, there are actually 0 billionaire traders. And out of those 3,000 billionaires, they are primarily composed of investors because of compound interest and entrepreneurs. So overall, if you're looking to make money in the stock market, you want to be an investor, not a trader. Investors focus on time in the market, whereas traders are trying to time the market. It's compound interest, time in the market, that really works in your favor. That's how you truly build wealth. Hey, if you like this video, go ahead and hit that like button. If you want to see more like it, hit that subscribe button. And if you want to learn more about investing, you can go ahead and join Tykr for free. All right, we'll see you in the next video. Bye for now.